Number one, under the 10 SMA on one chart, I have the 10 EMA on another. I use them both. One is more sensitive to price movement than the other, but I use them both on dueling screens. And I said, okay, first of all, my first trigger went down. Then what do? I watched my first level, which was 662 and change. The next level was 661. Neither of them held. And I said, if the market goes under 660, I would consider shorting. Well, it went under, but it didn't turn into a rejection. Once this candle came up and connected and held, I took my long here. So this is your drop down. I take my long on the breakout of 660. As a matter of fact, I know for a fact that I took it once it went over 660.77. And then I just started, I started moving my stop loss and I left it the entire day. What I usually do with my stop loss is once it hits the first level, I start exiting any contracts that I have, any shares, which I actually took more shares than anything else. I'm very, very low on option contracts, just because the options movement I don't like, and we're already in the nosebleed sections, and I already had long options from before. So I start trading equities. I make a little less, but I feel safer with them because if my equity comes down, I can just hold on to it. I can hold on to SPY because I know there's 666 and 670. Am I going to make the same as an option? No, but my movement is way more stable than anybody else. So I could just sit on it with all the options that I already have on the long calls I took and the long puts that I'm hedging with. But if you went up here, you could have easily just had your stop loss run. Once you tag the 10 EMA or the 10 SMA, you're moving your stop loss and you don't assume where you're going to go up or you're going to go down.